Hi, everyone. My name is Ami. I'm the founder and managing partner of Spice VC. Spice started its life as a tokenized fund. We wanted to tokenize our fund. And when we started doing this last year, it wasn't very popular, so there were no technology, infrastructure, legal structure, nothing. So we pretty much built it out of scratch. We paid lawyers a lot of money. We built the technology to tokenize the fund, which later became a company called Securitize, which is now very successful and a portfolio company of the fund. And that was how we started. Very quickly into the process, we realized that tokenizing a fund is really just the tip of the iceberg. Once you start tokenizing securities, the potential is immense. Pretty much we realized that, and along with us, the market started realizing it as well, that any equity, debt, derivatives, any asset, any real-world asset can be tokenized and gain significant advantages through this tokenization. And this is a massive opportunity. So I was here on this stage, I think in April, and I was talking about an STO, security token offering ecosystem that will be created. And indeed, it was created. At the time, there were maybe a few companies dealing with STOs. Today, there's well over 100 companies. It's a very fast-growing segment. Everybody's talking about STO. So now, being kind of the pioneering area, we're trying to understand what's going to be the next stage. What's next? And what's next is this. Everything that is being done today on security tokens is being done on Ethereum. And this is an OK solution. It will take us to the current level. But it's not going to be the basis for a trillion-dollar industry that this industry can become. So you cannot build a trillion-dollar industry without proper infrastructure, without proper trust. And Ethereum doesn't have either of them. It's not sufficient. So we sat down and thought, what would it look like if we designed a blockchain from the ground up just for security tokens for ownership? And that's a project I want to talk to you about. It's not a company yet. It's not even a project. It's more of a concept, an initiative. And I'm presenting it here, but very open. It's going to be also on the website and open for feedback and contribution and so on. But I want to share my thoughts over the last few months about how something like that can actually be built. So the main area within something like that is to create a global base layer with a consensus, which I call proof of ownership. Okay? And this should be a simple base layer designed for capturing the most basic elements of what it means to own something. Okay? Regardless if it's its asset class, if it's real estate or debt or equity, all of the ownership has some basic things that are unique to this use case, like identity and asset management and privacy and so on. Second thing is that it has to be open. Do you want to go for something that's proprietary? It doesn't make any sense as an infrastructure for an industry that's going to be, within 5 to 10 years, looking at trillions of dollars of assets. It must be open, and it has to be liquid, because liquidity is the #1 advantage of tokenizing things, and it has to be legal. So all this ICO that we've seen, all the problems we've seen, that's STO is not about STO, is about regulation. Now the question I'm being asked a lot is, why do we need another blockchain? Why can't we do it over existing blockchains? And I think that when you look at blockchain technology, there are two types of blockchains. There's the general purpose blockchains like Ethereum and EOS, which claim that you can build anything on top of them. And they're built to be generic. And then you have the use case specific blockchains. Bitcoin is a use case specific blockchain. It just does money, just one type of money. IoT has use case specific solutions. Transactions, you have Ripple, you have Stellar. And in order to do a use case specific blockchain, it needs to be, first of all, the functionality has to be unique. And the functionality of ownership and security token is definitely unique. It has to be regulated. It has to have to know who the people are or the identity. It's not an anonymous network. It's very different functionality to begin with. The second thing, it needs to have scale. And definitely, we're talking about scale for this type of application. We're talking about a system that eventually, 10 years from now, can be the underlying infrastructure under exchanges, under NASDAQ. So you need massive scale. It needs to be optimized. And the third thing is trust. Now, when I talk about trust, it's important to understand an intricate kind of element of how blockchains work. Ethereum was designed by Vitalik, and he called it a crypto economy. And a crypto economy is a closed system. So if I give you 10 ETH, then you have 10 ETH because the entire ecosystem is designed to make sure that the 10 ETH are now in your address and not in mine. This is practically useless for ownership because I can give you a token that says that now you're the new owner of the Brooklyn Bridge, okay? And for Ethereum, everybody's happy. I don't have the token, you have the token, and the token says that you own the Brooklyn Bridge. But nobody in Ethereum is actually incentivized to check whether the Brooklyn Bridge actually exists, if I own it, if I can sell it to you. None of it there's no connection between the internal network and the external network. And all of this friction between connecting those two networks is all that this industry is working on. And a use case, blockchain, can do that naturally and much more in a basic form. So what would be the target of something like that? What would be the target of a blockchain that is designed to manage the ownership of trillions of dollars worth of assets? And I think that I'm defining the target in what it actually produces in the end. And what it produces in the end is an environment where if I buy a token, and this token gives me rights in an asset in the real world, okay? If these rights are denied, I can go to Ownera, to the blockchain, and download a full set of documents that could not have been changed, that are immutable, and nobody can contradict them, that I can go to a court of law and just get my rights. So in a similar way to if I have Bitcoin, I have the money, I want it to be a situation where if I have a token on Ownera, I have the asset. Nobody can actually cheat, nobody can say anything about it. It's actually more than just the security itself, it's the full ownership cycle, and it can be done quite simply. Now, the other element that's very, very important in understanding how you build a blockchain is the game theory. If your target is to make sure that the asset is well represented, the real world asset is really represented in a token, you need to make sure that the entire ecosystem is incentivized to make sure that it happens, that the asset is real, and so on. So once we get these two things in work, then we can have a platform that's much more optimized for security tokens and for ownership than what we have today. So in designing this concept, we kind of thought of 9 principles that make up what is unique and what is the must-have for the simplest platform. And I'm going to go over one after the other, so you can take a picture of this, but I'm going to make this presentation available on ownera.io later, so you can download it as well. But I'll take you through one after the other. So the first 3 principles talk about the entities on a platform like that. So the first entity is real owners. Okay? In order to transact within Ownera, you have to go through KYC and AML, and you have to be approved. So this is not an anonymous blockchain. It's a blockchain where people are passing KYC and AML with everything that with all the implications. Now, more interestingly, is what we're doing with real assets. We mimicked the concept of KYC to the assets as well, and we came up with a new concept called KYA. KYA is know your asset. KYC is know your customer. KYA is know your asset. And what is a KYA? KYA is a full set of documents that prove beyond a doubt who's the owner and what are the rights of the token owners. So for example, on Spice VC, our fund, people hold the tokens, but the full KYA would include our memorandum, it would include our subscription agreement, and all the documents that somebody holding the token will be able to go to court with and prove that it's indeed theirs. Now, the KYA will be different for different asset classes. You need a different KYA for a building and a different KYA for a debit instrument and so on. And we're not doing it at the Ownera level, but we're talking about a second level where the different sub-industries will define their KYA, but a KYA has to be there. And the last type of node that we have, the entity that we have in the platform, is what we call the nodes. Now, on a regular network, blockchain network, a node is anybody with a computer. But this is ownership, this is security tokens. So you need to have nodes that understand ownership, that can do KYC, that can do KYA. So we're talking about the nodes being expert financial, commercial entities. And it's open. Anybody that can meet the criteria can come in. So for example, in the US, if you want to be a node on Ownera, if you are SEC-approved entity, you can be a node automatically. Okay? Because that means that you are authorized to do things like ownership management, KYA, transactions, and so on, and you understand the legal ramifications, and you know that if you're doing something wrong, you're going to go to jail. Now, the KYA is done by those expert nodes, and I'll talk about it a little bit more soon. But this graph designs the relationship between those 3 entities. You have the owners on one hand, which will be institutional investors, and institutional investors will be able to trust this platform because of the consensus that I'll describe soon. Companies, people, individuals. The asset will be the different asset classes, real estate, equity, any type of asset. And the nodes will be investment banks, exchanges, security token providers, pretty much everyone in this industry that is doing something relating to tokens right now could be and should be a node on a project like Ownera, and I'll describe in a few minutes what the nodes actually do. So we have the entities that define this platform that's going to work in a regulated environment. Let's move next to the proof of ownership itself, the consensus. The Ownera consensus is a variation of what's called proof of authority because it's not an anonymous network. And half of the, a lot of the problems with regular or scalability problems with regular blockchain come from the fact that they're anonymous. We don't have that problem. Everybody is known on the platform, so we can go to proof of authority. And it works like this. Every node have their own asset, and they're the one that write the transaction into the block for these assets. And by doing that, the platform is automatically and by definition scalable to any level of scalability that we want to achieve. And here's the way that it works. The nodes are there to provide ownership services. So imagine you have an asset and you want to upload the asset to Ownera. First thing you do is you choose your primary node. If you're building, the primary node will be a company that is specializing in taking buildings online. If you are a equity, you will choose maybe an investment banker to take you up. The primary node has to agree, and you have to agree pricing. And once you've done the contract and you're doing it, the primary node is the entity that's doing the KYA. They're checking your document. They're taking responsibility, which nobody's doing in the market today. They're taking responsibility that the documents are real and that the building actually exists, okay? And they, with their reputation, upload the KYA to the blockchain. Now, what they gain in return is they gain the full lifetime revenues of this asset, because all transactions from now on will be written to the blockchain, and all the money for those transactions will go to the primary node. So you have a platform here where the primary node on the one hand are sophisticated company, those same institutional companies that institutional investors already trust, and they stake the assets that they actually believe in and want to bring up. They stake their reputation on them. If they're doing well, they're going to make a lot of money through the life of the asset. And if they're doing it wrong, they're going to lose their reputation, they're going to lose their revenues, and potentially go to jail if they're cheating. So this is a proof of ownership model. As you can see, it's designed specifically for the security token world, and it's much more optimized because of that. I'm going to talk about a few more of those nine principles of Ownera. So another element is atomic trades. On a regular blockchain, I send money to you, and now you have the money. On ownership blockchain, it's actually different. It's trades. I send tokens of an asset. You send money. It could be money, stable coin, it could be fiat, anything. But there's an exchange. And the exchange can settle immediately. Okay, so instant settlement. It can also be based on a smart contract, so it can be, the settlement can be based on rules or when the fiat money arrives. But in effect, it's all happening as an atomic swap in a way. And the interesting thing is that you can not only do the transaction on the platform, you can also state your intent. You can say, I want to sell 500 tokens at this price. You can just say it and then wait for a buyer, or you can say it and actually stake the tokens on a relay and wait for somebody to pay and then take the tokens. So that means that the platform is one big liquidity pool on which the exchanges can come and build their exchanges services. Obviously, to be an exchange, you have to be regulated, and you have to provide an interface, and you have to match buyers and sellers. But this simple platform can actually be the basis for the future NASDAQ, and not just the future NASDAQ, but the future ownership in general. Financial incentives, like any other protocol, it has the protocol token, and the protocol token is what's used to manage the incentives and disincentives. Regulation repository is something very interesting. Today in security token, every token replicates all the code to do regulations. That's crazy. What we think is that we can build a repository of regulations at the base layer as add-ons. Imagine there's an add-on for Reg D, and an add-on for Reg A+, and an add-on for 144, and so on. And you as the asset manager just plug in and say, okay, mine is Reg D in the US, Reg S outside the US, and maybe the Swiss law, and I attach these add-ons. And from that moment on, the security is now regulated by design. Now, people talking about regulation compliant, and regulation compliant is for babies. This is regulation enforcing, because once you connect the regulation to an actual token, nobody can break the law even if they want to. It enforces the regulation. So it's, people ask, how we're moving from ICO, which was non-regulated, we're moving to STOs, which is enforcing regulation more than anything that we had before. Privacy. Privacy is something that, my friend Jesus Rodriguez, he wrote about it. He called it the elephant in the room. Nobody talks about privacy. But I don't see institutional investors coming in large investments into STO when every hold that they have and every trade that they have is visible on Ethereum. So we have to have a solution where privacy is respected. Otherwise, we won't have an industry. And governance, in terms of governance, again, the idea is to have something that's open, that is distributed. Okay, it's going to be a lot of nodes. There's going to be the real estate experts in New York and the real estate experts in London and the debt experts. There are going to be a lot of different nodes, and it's going to be very distributed. But it's permission distributed. Not anybody can be a node unless they go through the criteria. That's it. That's the concept. And try to build something that is very, very concise, simple, but very powerful as well. I'm going to tweet more kind of updates as we go along and the website for this thing. But I'm saying it again. This is not a company yet. It's a concept. I'm opening it to the industry. It's an industry initiative, and us as Spice, we want to see this industry grow. So I'm calling for feedback, participation, anything of the like. This is kind of a long-term project that we're long-term initiative that we're looking into now. That's it. Ron, you want to join me?
My microphone working? 1, 2. Can you guys hear me? Oh, amazing. Thank you very much. Good afternoon, guys. I'm Crypto Man Run from CNBC. I host a show called Crypto Trader. And I've been asked to come up and just chat a little bit further to Ami about the concept and about what you're doing. Ami, I must say, first of all, it's very refreshing to be at a conference and to be on stage where usually we're used to people pitching their ICOs. And it's very refreshing that someone stands up and says, I've got this amazing thing, and I'm not actually asking you for $50 million, and there's no token generation event. I think it's probably a good representation of where we are in the market and showing where the market's actually going. So just some background. You raised a fund which specialized in investing in security tokens called Spice VC. Yeah. Tell us a little bit about Spice. So Spice is a fund that sees the potential of this industry to grow from practically zero to tokenizing trillions of dollars of assets. And what we're saying is that there has to be an infrastructure built. And there's going to be Coinbases, and there's going to be the Facebooks, and there's going to be a lot of companies that are going to grow very big if we are to get to $1 trillion market. So what we want to do is we want to give our investors exposure to the growth of the token securitization market. So if they invest in us, we will, for them, pick the winners and do it more professionally. So I've been following the growth of your fund. In fact, if you remember, we met when you were still raising the fund, or when you were still talking about raising the fund. And I've been following the growth of your fund. You guys have had some very significant growth despite the fact that we're in a bear market. Can you share some of the numbers? Are they public? Yes, they're public. As a tokenized fund, we have to share a quarterly NAV. And what we've seen was that when people bought the security token originally, they bought it at between $0.8 to $1. That was beginning of the year. In our last NAV, which was released about 3 months ago, the NAV was 1.38. So is that a function of security tokens not having any correlation to utility tokens in terms of market movements? Or is it a function of you guys just being geniuses and being able to buy things that none of us know about? Not at all. Because my portfolio hasn't gone from 0.8 to 1.34. Not in this period. But I think that the key... Mine's gone from 1.34 to 0.8. So the security token, in our case, actually represent our investment in companies. If you hold a token of Spice, if there's an exit, you're entitled to get money back. And
lo and behold, our companies are doing really well. We have a company that we invested in. We have a good chunk of the company. Company is profitable, raising more money at higher valuation. The NAV is going up. So it has no correlation to crypto. It has correlation to the underlying asset.
Okay, now, what baffles me is after seeing a presentation like the one you showed us here today, how were people planning to deal with the ownership issue before what you presented? I mean, you've got what is cited as the next big wave of blockchain, which is the security token. We've been talking about it for a couple of months, and everyone says it's the next, the biggest use case for blockchain and the next revolution. How are people dealing with it now in the absence of something like Ownera?
Okay, so I actually I was a product guy who built the original product for Securitize. So I know how it's done. And what we're doing today is basically building smart contracts. Smart contracts, they are very complicated. And what they do is they do two things. They manage regulation, and they bypass the limitation of Ethereum. They add identity on top of this. And it's all like this. It's all very hard to do and very difficult. So it's very difficult to build more sophisticated apps on top of that. So what I said there, I didn't say that Ethereum cannot do it, but what I said, it will not scale. It will not scale. It will not scale functionality-wise, it will not scale trust-wise, and it will not scale transaction-wise.
So I agree that the scaling issue is one of the issues that Ethereum is having, but I'm not sure that the only limitation between where we are today and between a securities token revolution is the scaling issue.
I'm not talking about scaling in terms of the transaction throughput. I'm talking about scaling in terms of functionality, in terms of the ease of which you are able to build things, build new ownership capabilities, sophisticated derivatives, the solutions for debit that are very unique, adding all sorts of applications that are specific to ownership. And I think that this is the key element to understand. Ethereum was just not built to do that. It's an anonymous network. And that's how it was designed, and that's why it's not really suitable. So it's something that we can use in the interim, and we are using it in the interim. But in Spice, we have the luxury of sitting one level above and saying, hey, what's next? What's going to be next year? And that's what's going to be next year.
Now, I mean, there are other protocols that are around for securities tokens. I mean, we know that Polymath has one, which is their protocol. I can't remember the name off the top of my head. I mean, do they solve any of the problems that you've just mentioned, such as ownership, et cetera?
So by definition, nobody solves the problems on top of Ethereum. Some protocols, and I've been involved in some of them, solve some of the problems, but not others. Like nobody solves privacy properly. Governance is difficult. Almost nobody solves the connection between the token and the real-world asset. This is completely new to this platform. And people are saying, okay, so if you bought a token of Spice, okay, and I'm looking at our own token, because I've been in the trenches, as you call it, and our own token, Spice, okay, you own the token is yours, it's legally yours, everything is fine. But the memorandum and the subscription agreement are on our server, separately, they're not on the blockchain. Okay, so now we're good people, we're not going to change the memorandum or do anything to it. But if you're building a system that you want everybody to trust, you don't want different people holding different parts of the ownership. You want it immutable.
Now, you spoke about one of the pillars being regulation, and the fact that the proof of concept, or the new concept here, really deals with the regulators. How does it work when you've got multiple regulators in multiple jurisdictions with different ownership laws? And I'll give you a great example. The process of owning a property in India is very different from the process of registering a property here in the United States. How do you deal with the differences? Because what we want to do using blockchain is, and specifically securities tokens, is create a platform that is country generic and geographical border generic and not specific to any one of them. How do you deal with the different legislations in different jurisdictions?
So actually, that's the advantage of the platform. That's one of the reasons a platform like that exists, because if you don't have a platform, there are so many rules. But what we have done, and there was frankly no other way of doing it, we just spent a fortune on lawyers, country by country by country, and we mapped the rules one after the other. And then when we finished mapping them, we programmed them. So if you are a user coming in from India, the interface that you will see on a platform is different. And that's what security token industry is doing today. The next level within Ownera is going to be programming them as add-on that will be open source and everybody can reuse, but also that the community can contribute. So if, for example, I don't know, in Lithuania, they have a new law, a programmer from Lithuania can add an add-on for their local law, and anybody can use it afterwards.
And so you mentioned that it's a concept, and I think you were very clear about the fact that you're not raising money here today. In the absence of something like Ownera, we simply cannot progress very efficiently with the securities token in play. Mm-hmm. So we have all the exchanges coming online. We have T0 coming online, open finance coming online, et cetera, et cetera. In the absence of something like this, are they going to continue to run in a flawed system on Ethereum? I mean, is that the big plan here?
Look, the situation over Ethereum right now is there are at least 5 different protocols competing for dominance. DS protocol from Securitize is, I think, the only one that's actually deployed. Our token is deployed on it, but then there's the Poly token and the Harbor and the Trust. And there's quite a few, like at least 5 that I know of. This is a problem.
And do all exchanges support all 5 tokens?
No, the exchanges have to support each one of them separately, and we are going to each exchange and doing the integrations. It's a mess. That's why I'm unveiling this concept early enough so that people can have the debate and agree what is the right way going forward, so that when we actually build it, there won't be like 5 different protocols, there'll be just one.
So what's the process from now? You've unveiled it here today. I think tomorrow we're going to be screening it on CNBC, and it's going to be, you know, one of the big breaking stories about it. But what happens from this point? What's the process from now until such time as you see this protocol actually working?
So at this stage, we're just capturing feedback, and I've been receiving, even before it was public, I've been receiving a ton of feedback from everybody, getting a lot of excitement around it. So the first thing will be to solidify everything and come out with a white paper that the industry can stand behind. Then we're looking, you know, for the team. We already have some teams that we're talking to that might be leading this. Nothing is settled yet, but I'm, you know, looking for the right lead for this on the technology side. It will just happen. And our reputation has been a reputation of deploying stuff. You know, everybody in the market are talking, and there's a lot of companies that are very good at marketing. We were just sitting down and deploying stuff. So this is something that we'll deploy at some point. It's just that it's very early now, and I think that the industry is now at a stage where we should actually expose it at this level before we move forward to get feedback.
Is your plan to expose this protocol to what have traditionally been competitors? So, for example, Polymath, or maybe even Securitize, or one of the other guys. I mean, is this a discussion you want to have with them in the room?
So I don't see any one of the companies that are using protocols on top of Ethereum as a competitor. Actually, I will offer them to just swap Ethereum and replace it. There's the application level, where 99% of the market is in the application level now on top of Ethereum or similar entities. All I'm saying, and they're all talking about being blockchain agnostic. So they don't really care. If I remove Ethereum and bring in something much better, much more suitable, much more scalable, much more trustworthy, then they'll sit on top of that. So, and I'm not aware of any base layer dedicated to security token that's been announced yet. So this is the first one. So currently, I don't see why anybody should have any problem. Actually, the opposite. We want it to be nodes on this platform.
Okay, so I mean, we've got a couple of seconds left, but before I let you go, or before I open the floor up to questions, the securities token revolution. We've been hearing about it for the last 12 months. We've had promises of real estate that's going to be tokenized, et cetera, and I haven't seen many things happening yet. You're quite realistic in your approach, and you're quite pragmatic in your approach. When do you think that securities token is going to be a real wave? When I say a real wave, not something that few people do, trying it out as these early adopters, but actually be a real thing. Are we a year away? Are we 3 years away? Or are we 5 years away?
There's a crazy situation here. 6 months ago, when I was talking about security tokens, nobody knew what I was on. Now I'm speaking to heads of banks in New York, and they're saying, yeah, it's going to be $1 trillion industry. So there's a hype in the market. The infrastructure is not there yet. What I can tell you is that us building the stuff, okay, we know that it's much harder to build, and that's why the exchanges are also taking more time to arrive. There's at least 5 that are on the verge of launching, and I think that will be the beginning of the next kind of big jump, okay? And it will go on like that. But to reach scale, the level that Ownera is talking about, probably 3 years you'll start seeing that kind of scale.
So yeah, it's a 3-year away thing. If there are any, I'm being told no questions, time is up. Thank you very much, guys.
Thank you. I'm available at Ownera if you have any questions.
Thank you.
Thank you.